What's going on, everybody? Brenton here for another video. Sorry for being a little late, you guys. As you guys know, that my sleeping schedule is a little different throughout the weeks because I'm trading London session, so I was actually resting, but now I am up and energized and better than ever. So I hope you guys are having a great Friday. Happy Friday for everybody that's at work, and for us speculation investors. This is the end of our trading week, and I just want to do a recap today and talk about different things like the fundamental analysis and how we can be able to correlate these fundamental analysis into our trading strategies. So what I was actually able to do, I actually put my trading strategy into the Discord group for you guys to be able to check that out. What I like to do, what kind of chart patterns I like to look for, and also what type of system that I look for, right? So I'm heavily into, obviously spirituality and bringing things together in that way. So I put all that stuff in there for you guys to take a look into, and as well as eating healthy. Your body's your temple. So that being said, you guys, I want to talk about the non-farm payroll that came out in today. So as we can see, that came out positive, but it didn't really have an effect because we had this huge spike. So our market was already priced in. So what we saw with the USD Japanese yen is that we saw this consolidation for about a day and about 23 hours. We're seeing this consolidation, but what I want to see is after we see this trap, we're going to start to see Monday maybe hit the downside. The market retest 106,500. After we see 106,500 be retest, we're going to then see a bounce up to the high and then make an upward formation, and then from there it will continue with trend. So that being said, this is just consolidation, right? We're going to obviously trap the liquidity from the upside buyers like we talked about in previous videos. Market consolidation is being trapped. We're going to non-farm payroll, and we'll just look over that. So what we talk about, so I use Forex Factory. Shout out to Naeem once again for showing me this. I also use investment.com. I have that on my phone, so it gives me the alerts. So what I saw was that the average hourly earnings came up positive, which is good for the US dollar, especially with everything with we have the federal chairman talking right now, which is going to be huge, and we're not going to probably see that much more movement just because we saw so much volatility this week, and we saw price being moved so much this week. So what we're going to probably see during in the near future is see price being moved. Let me see. Sorry about that, you guys. I want to make sure I get all you guys in here. Whoops. So what we're going to see is probably price being moved into an area of consolidation, where price will then move to the upside or the downside due to having really just fundamental analysis and where they're going to basically predict where price is going to go for the end of the month. So analysis wise, we're going to be still looking for a downwards trend. Obviously, this was just to make this this second leg or this first leg to the downside, and after we had that first leg to the downside, we're going to see price consolidate to the high to chop the buyers, right? There's a lot of buyers in this area, and then once again they're going to work off that low one more time, usually at a psychological level, which is 106,500, and then retest previous highs, kind of making that W formation, right? So that's what we're going to see probably with price coming into the near future. With just everything that's going in together with the US dollar, we can go. We took a trade. We actually had 3 trades. We had the USD Japanese yen trade. We went long. We also made money on the Great Britain pound money, and we made money on the euro. So we made around last night I made around, I think it was 170 pips last night. I made 92 pips on I made 36 pips on my first Great Britain pound trade. I made 92 pips on my second Great Britain pound trade. And I try to the thing about the signals is that I try to make sure that you guys are getting exactly what I'm doing and entering. And then I also did a short position for the Euro USD, which I got 72 pips on. So it was a really successful night. We made some good money last night on for the end of the week to recover off previous week lows. So really great market, really good market week. So just to go over and recap what I exactly why I did the trades I did and why exactly I was long in these positions and so forth. So I saw that the market was going to have this angular support, which is more of an ascending triangle. If you guys have seen ascending triangles in just basic technical analysis, is when it's making a lower low and a lower high against previous trend, and then it might break out to the upside. But as we talked about before previously, we're going to probably have a false breakout to the upside to get all those breakout traders, and then the breakout traders are going to get trapped here. Then they're going to drive price back down, and then after they drove price back down, they build up enough liquidity, and then they're going to shoot price back up, then test those previous highs. So just to get a lot of the traders, you know, on their off their toes and stuff like that. So we're not going to really see a lot of this data come into fruition until probably Monday's market or Sunday. We're going to might see a market gap on Sunday, which is a possibility. And then obviously, like I say, I use the moon cycles as well to correlate my strategies, which I'll be able to show you guys in later videos on how I use the moon cycles into factoring how the momentum of the market's going to be move. So because a lot of this stuff is priced in, and it does have a valid distinction on where price will go. So as we can see that this is a ascending triangle where we see the ups and downs. Price is going to break out to the upside, that false trap breakout, come to the downside, and then after that, then they're going to reverse trend, or they might just keep on continuing to the downside. Kind of like what we talked about in yesterday's video, where we talk about how, and I want to talk about this because it's in the Market Maker's Handbook, and it's something that I have been doing backtesting for a while, on how the market does have a huge impact on the fundamental analysis has a huge impact on how market price is going to go. So let me just get that right for you guys. Okay, perfect. So false wedge breakouts are very high profitable formations. They formulate around the end of the month. So I'm going to actually make this bigger for you guys because this is actually not good enough. So let me just make that bigger, and let me make it bold for you. So false wedge breakouts are a very highly profitable formation in the market. They formulate around the end of the month during or end of the month or the beginning of the month during high big news events, right? Such as non-farm payroll, CPI, GDP, unemployment rates, right? So we're talking about these right here, right? Unemployment rate change, hourly, and non-farm payroll, right? So this is where we're going to start to see these ascending triangles. And as you guys can see right here, price is making that ascending triangle, as we talked about, right? So it's already coming to formulation, right? So reason for the false is because the market gives you time to follow the breakout direction and giving you percentage gain. So that's why I talked to you guys about why the market's going to break out. All those breakout traders, right, and scalpers are going to get caught in this liquidity trap from 109,500, and then after that is being formulated, they're going to consolidate price in that area, and then they're going to trap you and then dump and hit your stops, because that's what the market does. They do that to manipulate the price before they do the exact opposite, because you want to use the false wedge breakouts going towards the direction of the trend. So what this is that the reason for the false is because the market gives you time to follow the breakout direction and give you percentage gain. We just talked about that. They call this inducing a response for the average speculation investor. This is how market makers and big fish manipulate price and move liquidity to a certain area of the market before reversing price. And the diagram below, I will show you guys how this works. So this is one I took previously. This is obviously previous to last year. So this was in August of last year. So just like we saw an ascending triangle, and it broke out, as you guys can see, that was a false breakout. I caught it at that high and I sold, and then I got it twice. So I got it at the first or the first hump of the M and the second hump of the M, right? So then market makers, liquidity providers, investment bankers are the ones that are doing 92% of the volume. We talked about that. So after the average retail trader catches the bait of the wedge formation breakout, they will be trapped in a range consolidation for a couple hours or a couple days, depending on the time frame you're using. After the market builds enough buy orders, they will reverse price. This very interconnected to highly impacted news events. As we talked about, this is the highly impacted news events, and this is where we're at right now, where we're seeing that same formulation as we saw right here, where price is literally coming up into this level. High impact news event, breakout to the high, and then consolidation, and then false breakout back to the lows. So that's why this is a very, very high profitable setup. It happens all the time around these news events. That's why when you see a lot of people that are trading non-farm payroll, they have a specific strategy. Well, this is the specific strategy that I use when I'm trading non-farm payroll and having the markets going. So how do you draw your fibs? What impulsive legs do you start with? So I'm going to get over that in a second, and what levels I like to use for the Fibonacci. And I use the Fibonacci only when I'm trend trading, especially when I'm going on a trend trading, and also it's mostly when I use the bullish market. So I only focus really the Fibonacci when I'm going bullish. I just don't have a good sense of perception when it comes to bearish Fibonacci retracements, just because I've been using it for so long on the bullish market. So I focus on the Fibonacci. So I'll go over that, Michael. But going forth with what I was talking about earlier, guys, is that this is what I look for. So the key elements on what I like to look for when I'm looking for these false wedge breakouts is catch the high or low of the false wedge formation. Look for M and W formations at the weekly highs or lows. Take into consideration midweek reversals, and then look for these formations at the end of the month or the beginning of the month, and watch for the market stop hunts at the high or lows of the reversal. So that being said, we're looking for that higher low of market price to go into a direction. We're going to look to test this high, consolidate price, probably work off that high once again, and then drop price back down to catch what lower levels, and price will then have a nice take profit area back at these lower levels with very minimal drawback. So that's a big one that I want to show you guys, and how that I believe that price will be able to go in the near future. Great Britain pound's kind of doing its own thing. It's a little different. So to answer your question, Michael, this is a perfect one on, I took a buy position. This is where I made 92 pips last night, or earlier this morning. I kind of been up all night trading this market. But what I did was that I saw that there was a consolidation, or range consolidation between 60 to 120 pips. So what I did was that I drew a price range between, or 180 pips, excuse me, from here to here. So what I saw was that if I draw a Fibonacci from this lower low to this spike on the downside, or this higher high to this spike to the downside, I will then be able to counter trend trade this onto where my spikes and where my bullish momentum will go. So what I did was that I obviously took a long position already, where I went long here, and then we already caught 52 pips, which we already talked about in the Discord here, where this was about 2:26 a.m. where I did my market update, where I made 52 pips in the Great Britain pound, and then I obviously was giving you guys updates as well. So then we caught 52 pips already on the upside of the Great Britain pound, and then I waited for that drawback. So I saw that there was a drawback here. So this is this drawback, or not a drawback, but a correction leg. I saw that when it did this and it was consolidating at the 61.8, I knew it was a buy. So what I did was I took my buy order. After I took my buy order, I closed with about 97 pips on my second entry to the Great Britain pound on a long leg. So to answer your question, Michael, I look for my Fibonacci levels. The most key Fibonacci levels I look for is the 61.8 and the 38.2. The 50 is good, but it varies sometimes, and that's not a very firm one. But the most firm ones are the 38.2 and the 61.8. These are the most confirmation, and there's a lot of people that use Fibonacci, and I use Fibonacci when I see, like I said, you guys, I use this when I'm counter trend trading, or I'm doing continuation trading. So I'm looking for the lows, and I'm looking for to buy, and where price is going to have the nice bounce off that retracement while going upwards or going. I don't really trade it on the downwards position. Just like I said, my perception is a little different on that. So I hope that answers your questions on how I look for the Fibonacci levels, on what Fibonacci levels and what impulse legs do I start with. So to further answer your question, the impulse leg, essentially the impulse leg is when I see a drawback, right? So when I see a drawback as in like right here, where price drew or had a little bit of a correction, or it made a high and then it made a higher low, right? Or excuse me, a higher high. And then when I saw that higher low formulate at the 61.8 and I saw stochastics was low, I knew it was a buy, so I took this buy and I got that profit on that big trend to that breakout to that high. So then I was already in this position, right? We were in this position already at here, and then we got up into this area. We made profits, 56 pips, waited for that correction, saw that Fibonacci retracement of that 61.8, saw that I was at a higher low, stochastics low, boom, 3 confirmations to our trading plan, and I have my trading plan in the Discord group for you guys to check that out. Then I saw that bullish momentum to the upside, where then we caught 97 pips, and then we took our 2 trades. So I hope that answers your guys' question when it comes to how I made those positions and why I traded that market, right? So to go forth with the Euro USD, perfect example of the Euro USD, I saw that this was a W formation at the moving average. So what I did was that I saw consolidation at this range area between price for about a day, and this is actually right here. I saw it for about 23 hours. I saw consolidation, high wicks. Remember the hands I told you guys about? We see all these hands being trapping all of these pending orders. So I knew that it was a matter of time before price was going to reverse. So what I did was I then took a short position here. I caught about 50. I can't remember. I took about I did a 40. So what I first did was that I was up 47 pips, and then I had a trailing stop. So what happened was that the market retested those highs. So my trailing stop got hit out at 18.5 pips. And then I re-entered the trade, and I got back in the trade, and now we're back in money once again, waiting for that next correction, and then I'll have a trailing stop, and this will be an even trade on where price will then be very, very in the cash money. So that's where these are my trades for today, you guys. And they're pretty simple. I just wanted to be up in the morning and actually day trade this because I've been doing not a lot of swing trading, but I've been like not watching my positions all night. I've been just like holding them and then waking up to either being in profit or obviously taking a small loss. So what I did was that instead of doing that, I wanted to actually make it very, very hands-on for you guys to understand my trading style and how I trade, because then you guys will have a better understanding of why price moves the way it does. In my opinion, you guys start to see my perception on why price does what it does. So I didn't take the Great Britain pound Japanese yen trade. Like I said, I mostly focus on US dollar, Japanese yen, euro dollar, and Great Britain pound. I do go to Bitcoin as we took a stop. We got hit on our stop on this trade. What I'm looking for Bitcoin is that I'm not looking to go short. Reason being is that we see a peak formation low and we see a market anchor leg, which is basically a consolidation area at another structure leg. So if we go to the 1 hour chart, we can see price has already formulated that peak formation low, and then this area is considered a market anchor leg. So if we go to Market Maker's Handbook, we can see right here, this is the peak formation low, and then after the peak formation low, we want to look for a market anchor leg, which a market anchor leg is basically showing you that there's confirmation that this is now going to be in a buy zone. So let me grab that for you guys so you guys can see what I mean by that. I swear I did a market anchor leg. Did I not price that in? Whoops, that's something I got to add on to there. So I'll just read this off. So market anchor legs are when the trend has come to an end and looking to reverse price. This considered the end of a bullish or bearish market. This happens after a big market run. This can happen in a micro or macro perspective, just like here. We see that this is the end of that bearish retracement, right? That run that comes to the downside, makes that peak formation. And then what this anchor leg means is that this is where price is not going to break anymore. This is where price is going to end, and then now we're going to see market test higher. So when I saw this market anchor leg, but all we were seeing is a nice drawdown area. So this just is drawdown. So obviously my entry was just a little too early to the party. So I'm going to re-enter this for a bullish. I'm trying to test 4,000. That's going to be our next entry level at that 61.8 Fibonacci level. So if we do see that, we're going to see that probably next week, and price is going to come up into this area and test this area. So that's going to be a nice signal for us for the BTC US dollar on where price is going to move on that note. So I'm going to actually have to add on to that because I thought I had it. So this is obviously you guys can see that this is the market anchor leg. Excuse me, this is the peak formation low. And then the Great Britain pound obviously reverse price after a peak formation low. This is an example of how the market creates consolidation at the end of a trend and also starting a accumulation phase, because we talked about the 4 phases: accumulation, market up phase, distribution, market down phase. This also has to take into consideration how price moves in a certain direction. So price is making that accumulation phase, price is making that accumulation phase. then that market up phase is all this area, and then we'll see price hit higher levels, hopefully, to hit those, to make that market up phase, and then we'll have a distribution phase. So we have to take this with a grain of salt, see where price is going to move in the near future. So can you give a day to live trade so we can get insight in professional traders process before entering an exit? Yeah, of course, definitely. I try to trade during the day as much as possible, but just because of my trading style, trades during London session, and I do my trades like just kind of honestly whenever my setup is available, I try to get that live. But Michael, I promise you in the next couple of days I will be able to do a live trading setup with you guys. Even if I'm on the minute chart, I'll get it. Actually, we can possibly do it now. Let me see if I can. Actually, right now is not a good time. It's already 12 o'clock Pacific Standard Time. The price has already been priced in. On Monday, I'm gonna try to make that happen, Michael. I promise you, I'm gonna try to do that because I know that I want you guys to see that I'm gonna be trading live and have that live trade, because I have had live trades on the live streams. If you guys looked at my last videos, I've made some trades like the USD Japanese yen. We made that trade last week where we caught about 62 pips on the upside. So I do have those available, but I will get that done, Michael, where we do have like a live stream where I actually trade during the live stream, and I'll make that available for you. So just give me some time, because I have to make sure that I can see the setups correctly, and I have to like make sure that those specific setups are going to correlate into my strategy as well. I don't want to just take trades because I'm just trying to show you guys how to trade, because you all know how to trade, but I want to make sure that you guys see that my trading style is works best for your guys' type of strategies. So moving forward, let me just get a little sip of water. Excuse me. Okay, so moving forward, as we can see that price has made this lower low. Price is going to definitely go up for the Great Britain pound. We're going to see a nice bullish retracement to the upside. Reason being is that we saw that spike to the low, making that peak formation. Then we're going to see that consolidation maybe, and then we're going to start to see upside momentum, test these previous highs, and that's where we're going to start to see the upside momentum, because we can already see that this is the first leg, right? The first market anchor leg, and then this is the peak formation. Then we might see a second one, possibly, and then we'll see an upside direction, but we're definitely going to go long for Great Britain pound, US dollar here coming forward. For the US dollar, Japanese yen, we can already see that price is going to definitely be going to the downside, especially if this false wedge breakout does formulate where price tries to induce those buyers to go long, and then it breaks to the downside. We'll see it try to retest these spike lows, and then that's when price will then formulate another direction, or continue with the direction it's already been going, because like we said, we want to go with price when it comes to the false wedge breakouts. We don't want to go against price. That's the biggest thing about trading these market setups. Knowing to go with price, and knowing when to not go with price. Excuse me, guys. It's been a long night. So anyway, that being said, if you guys have any questions and things that you want me to go over, this is gonna be a pretty short video, just because fundamental data actually came out a little less than I expected. I thought I was gonna see a lot higher spike, but we went over how price is going to formulate with the non-farm payroll and unemployment rate. We're gonna see that false wedge breakout to the upside, break these levels, and then obviously continue back to the downside trend. So if you guys have any questions on things that you want to go over at this time, please feel free to put in the chat, and I'll gladly go over it. Just because it is Friday, the market's going to be closed in about 2 hours at my time, Pacific Standard Time. And yeah, so the prediction for price now, so I am still in this position right now for consolidating on the Euro USD short. I possibly will see the second leg go lower. I'm probably going to close this position before I get out of the day. In this close, I already made another around like 6-8 pips on this trade. So I'm up around like 200, or let me see how many pips I made today. Pip wise, I think I'm at, calculate, I think I'm at 190 pips right now made as for the day. So pretty nice day for all three pairs that I've been trading. So if you guys see that, I did put my trading strategy in the Discord for you guys to show and look at that as well. So No, did not know to trade. I'm learning from you. Haven't placed a trade. I haven't used MT4. No, hey, this is the best time to learn, best time to learn before I got in, I just went straight for it when I first started trading, like I told you guys my backstory. I started binary options, I was just, I just threw money in there, and then ever since then I got hooked, and I just, after I made my first $1,400 in a day, I was like, wow, this is so possible. You just have to have the due diligence and hard work and just be able to, just do what most people aren't willing to do, which is stay up at nights and, have countless of nights of, just grinding and studying. So yeah, practice makes perfect, but it's not really practice makes perfect. Perfect practice makes perfect. So you have to like you have to like factor in if you are still trading on a demo account, and if you're still trading on the emulated broker from like MT4 or whatever. You have to like practice as if it's like a real account, because psychologically your subconscious mind doesn't know what's difference between what's real and fake. So whatever you put in your subconscious mind will allow itself to reconfigure itself into establishing that paradigm, right? That methodology. So when you have that, you can now really decipher whatever you establish, whatever you want, right? So just think of it like a program, right? You're just subconsciously programming your brain, and then you're typing in an algorithm in your mind, and then boom, So like even if you had a demo account, but you're trading a demo account, but you're trading it like if it was a live account, when you put your live money in there, it's going to be the same thing. You're not going to have like a totally totally different transition between real and fake money. I mean, that's just how I did it. So, but I started with real money. And then I went back to the emulated market for about a year because I wasn't very confident. And then when I put real money in, but since I was trading it like it was a fake account, I took that $3,000 account to $27,000 in about like 4 months. So like it was really easy for me to get into that process and really get into that flow, because it was like I was practicing every day like it was a real account, like it was a live event. So perfect practice doesn't make perfect. Perfect practice makes perfect. So we have to like always try and make sure that we're trading like it's like a real deal if you're not trading in the real life market right now. So that was my tool of success. And then that's what my mentor taught me. Like if you want to have that, you have to make sure that you literally desire it as if it's already like here right now, right? So that like that vision, that laser focus will then decide your factors. So I mean, it's been really cool, you guys, and I have a lot of other things that I want to teach you guys when it comes to price and stuff like that in the near future, where price will definitely be able to show you guys. I'll be able to show you guys some different strategies and different structures and stuff like that. Excuse me, in the near future, where price is going to be moving. So, like I said, this is not going to be that big of frames are dropping hard. Yeah, definitely. Definitely, it's going to be a huge week and a huge month ahead of us. Like, we're going to see so much movement to the upside for the Great Britain pound, so much downside movement for the US dollar, especially with Powell going into speaking in literally about, I don't know, like an hour. We're going to see what he's going to have to do. We're going to have a lot of, this is where I get a lot of my fundamental data and stuff like that. If you guys want to look at Forex Factory, it's a huge one that I use. I use investment.com as well. And, take this with a grain of salt. A lot of this stuff is propaganda, but you got to make sure that you can considerably be very socially aware and economically aware of whatever, the big bankers and institutions are moving the price, because then you won't get caught up in like price and stop hunts like this, where price just literally drops 400 pips in 2 hours, where you won't be caught in that chaos or that momentum. So that's where I believe that price will then, that's where fundamental data does come into consideration, and it does come into formulation. So really awesome stuff, you guys. Thank you so much for being here on this Friday, and thanks for always being here and being so like really just so kind, and just taking these gems that I've learned the last couple of years, and just basically been able to make a lot of money in the forex markets, for you guys to be able to do the same thing and just really just cut and paste what I learned and bring it for you guys, because obviously when you guys are making money, that's honestly like if I was going to make money, because I love when people are making money, and I love when people are trading and having a prosperous life. I believe everybody deserves to have a prosperous life. It's just all about your mindset. So with that, moving forward, we can see that also that the gold is going to be shorting for probably another couple of days, maybe a day or two, before we see that second hump to the high, and then possibly we'll see a correction, but then we might see an upwards direction to the low, making that W formation. So price will definitely be either continuing to the upside after this run, and then if it does decide to come back up, it will have that W formation. So we'll try to make a buy position if it has that next second leg here, where price will then come back up and test that 1300 level, which is a huge key fundamental support level. So if price does drop back and test that level, then we will take a long position just for some minor pips. But if you do have a nice leverage account, you can definitely make some good money on that trade. So really exciting stuff. This is awesome stuff. USD will decline, gold will rise, and oil will decline. Definitely, that's what 2009 is looking like, or 2019 is looking like, Michael. That's really, really, really good analysis. And if you stick with that analysis and if it does work, man, you're gonna make some big money this year. Definitely looking for those same exact things. Actually, I had it on my wall when I was at my other place in West Hollywood. I had it on my wall, like what things are going to do for in 2019, right? I had USD Japanese yen shorting, I had gold buy, and then I had Great Britain pound buy, and then euro a short buy. So I had like these things already mapped out. So these things are coming to fruition. Price is definitely going into the right direction. We're starting to see a lot of momentum. We're going to start to see a lot of reversals in the market right now, just because the market has its own different range now, because it's in a completely different year. So we're going to start to see a lot of different changes, you guys, in the market, and a lot of different ways that price will be able to be factored in. So if you guys have any questions, please feel free to put in the Discord. Thank you so much once again for being on another live stream. And I know today is not that long of a live stream, just because the market's already done what it was supposed to do, and it was priced in for these unemployment and also the non-farm payroll. But come Monday, we will see a lot of this effect be taking place, especially after we see Fed Chair Min go into his speaking and see what he's going to do. If we are going to have those interest spikes this year, if we are going to leverage price and if price is going to move higher, we will have that into consideration. And I'll obviously update you guys in the Discord throughout the weekend and give you guys my insight on what I believe is going to. So I appreciate you guys. Thank you guys so much for being on today's live stream. If you guys have any further questions, please feel free to put in the market. And from there, I will see you guys on Monday. Have a safe and enjoy your weekend. Make sure that you eat a lot of great food and you're hanging out with family. And if you don't work too hard, if you guys are working, make sure that you do enjoy your life, because this is supposed to be a fun life to live. So stay positive, you guys, and appreciate you guys being on this live stream. Have a great one. Brenton with Traders Profit Club. I'm out.